All right, all right. So, have you ever wondered what exactly do major business owners do to keep their business growing? What kind of strategies are they implementing? How do they find opportunities to keep on making money consistently and to capitalize on different growth opportunities that come about? Joining us tonight, we are going to have a business leader, business expert with us. We have CEO of Kingston Properties, Kevin Richards, who is going to be joining us to share his experience around business and investments and what's led to his success and his business's success.
Hi, Keisha.
Hi, Kevin. Always a pleasure to have you
Same
on.
here.
Big up yourself. Welcome to Money Classroom.
Yeah,
So let's jump into first some background on Kingston Properties. Some persons may be new to the show, some students who just transferred into Money Classroom. So let's talk a bit more about Kingston Properties and what exactly does the company do.
yeah, man, sure. Before I get into that, I have to tell you, I love the theme, the music theme. It really sounds like money, like real.
Ah,
But anyway, KP, Kingston Properties. Interestingly, we're celebrating 15 years of existence. We started out in April 2008, and we've been in the real estate investing game for 15 years. And we're proud to be still around and looking forward to the next 15 years and 15 years after that and 15 years after that. What we basically do is that we buy real estate assets, like an office building, a warehouse, an apartment building, stuff like that, and we rent those out to people. So we collect cash, and also the value of the property increases. So that's pretty much how we make our money. We're listed on the Jamaica Stock Exchange. So for persons who don't have the huge amount of capital to buy real estate, there's a vehicle known as a REIT, but we don't have REIT legislation in Jamaica. But we're listed on the Jamaica Stock Exchange. So if you buy shares in our company, that's a way of getting exposure to real estate without actually buying the real estate itself.
so how does the company approach the different investments? Because we're buying up real estate within the company. What's the strategic approach? How do you choose the companies to acquire for your investments?
Yeah, I mean, and it's no different for us than it is for how anybody would make a decision around investing, because you'll have to look at a number of things. One of them is, what's your objective? Some people have short-term goals, some people have medium-term goals, some people have long-term goals. It depending on which one of those buckets that you are looking at, that will determine the strategy that you will employ in terms of investing. Because if, let's say, we're going to call short term less than a year, well, you're going to need a return in less than a year. Then your approach to investing is going to be different from if you're looking for a return in 10 years time. Where you can be a little bit more patient. So have to start at looking at what your objective is and your timelines. Because you have a lot of options out there, you also have to look at the return, because let's say you have a pool of cash. You could do a million and one things with that pool of cash, and you're going to look at what the return you'll be getting from that pool of cash if you went into option A, or if you looked at option B or option C. So you're going to compare the return on the different options available, and that will determine where you're going to be focused on. And most people want to make money, so you're going to go with the thing that's going to give you the highest return. Now, be careful though, because people always confuse return and think that it's an absolute thing. You have to take that into context of risk. There are lots of people out there promising you a very high returns, but you don't know the level of risk that you'll have to take on to get that kind of return. So you have to balance your level of risk tolerance in turn and match that with the return that you're getting. Those I'd say are the three main key things that you need to look at.
So as we think about risk, that's important because it's easy for a person to say, I just want to make some money. I
Yeah.
want to make high returns. So I'm going to do this. Not realizing that the investment can have a whole heap of volatility. You're making money today, lose money tomorrow, lose some more money before you start making again. So for persons, no, and fear comes in at that point. I said, no
Yeah.
man, nobody told me about investing that it could be this risky. What would be your advice for persons who are saying, well, I want to do a business, I want to make an investment. However, the money I have, I can't afford to lose it.
Mhm.
What should they be thinking about?
Yeah, be careful of who you're listening to. the golden rule to follow. If it's too good to be true, probably isn't true. So I would stay away from the get rich quick schemes because, you've heard the term Ponzi scheme. Charles Ponzi existed in the 1920s or whatever, and Ponzi schemes to this day still exist. So there are always going to be people who will be coming up with some sort of schemes that say, yeah, you don't have to do much, just put your money here and you'll get this big fantastic return. Don't follow that. Best thing to do is to stick to the evil that as some people would say. If you know and understand something, that's where you should be focusing on your investment. And I'll use me as a personal example. And I have no fear in saying this, but I don't understand crypto or Bitcoin or none of those things. So don't come to me with crypto. I am going to invest in things that I understand. Until I understand how those things work, then I'm not going to be putting any investments in there. And I think that's an important approach you have to take. Understand the thing that you're putting your money in. Don't just say, okay, someone says this is the return you're going to get, so you just go ahead and put money in there. You need to understand it and be able to explain it to a 4-year-old to guarantee a return on your investment. So risk is very important. A lot of people also, they're already in some sort of activity. You just need to enhance it. One of the things I always recommend for people to do is to constantly learn, so invest in yourself, like education. You could see, let's say you're in a particular job and there is a prospect for you to get promoted to another level, but you don't have a particular skill, then invest in a course or something that will help you to take it to the next level.
Yeah, that's very valuable advice, especially, that's why people here inside Money Classroom to learn, right? The students here, I like to say, they're astute because they recognize that to take my wealth building to the next journey, I need to educate myself. I need to know more than I'm doing. So let's talk about specific investments. So as a leader of the company, you're making decisions every day about different investments for the company. Let's talk about some that worked really well. What was some of the criteria with these investments that really stood out and that you found that really made them profitable for the company?
Yeah. Do your research. Listen to the market, and even if and I'm trying not to make it too specific about real estate investing because I know your audience is involved in different things. But whether it's listening to your clients, but listen to the market, figure out exactly what is in high demand. Taking it back to real estate investment, we know that there is a huge demand for warehouse space. We've become a hugely e-commerce economy. So, by e-commerce, I mean that, we're trading stuff. We're buying stuff online and you need to store them in a warehouse before it gets to the customers. Everybody is familiar with some sort of shipping and logistics company where they're ordering online and things are coming. So we realize that there's a huge demand for warehouse space. So what we've been doing over the last 5 years is investing heavily into warehouse spaces. So we've acquired a warehouse building near to the port. That has done tremendously well for us. We acquired that in the midst of the pandemic, right when we were in lockdowns and all of that kind of thing. And that investment has paid off significantly for us. I would say look at our financials and you can see the kind of return on that. But I would say listen to the market. Let me use another example. Let's say you are in personal care services, like a barber or a hairdresser or something like that. If it is that your customers want comfort or they want additional services, look at what additional service you can offer. I see people are offering additional things like facials or manicures, pedicures, that sort of thing. Just listen to what your market wants, and that will determine how you make that investment. And that investment definitely will pay off.
Right. So let's talk also about some of the investments that KP REIT has made. We see an IPO, which was successful, and listing, an APO, which was also successful, and then
a rights issue as well.
Right. So you've come to the market in different ways. Let's probably break down those ways per person, because we have also probably some students who are thinking, one sweet day could be me doing an IPO with my business and an APO and then rights issue. So what stage would you say a business needs to be in for each, and what happens at each stage?
Yeah, I mean, if you're going to be involved in the public markets, that is listing on the Jamaica Stock Exchange, they have a whole bunch of listing requirements. So I would say get some guidance from a broker, one of the brokers that is registered with the Jamaica Stock Exchange. They can give you a lot of advice on that area. But usually you're doing this because you want to expand the business. You see an opportunity that you want to take advantage of, you need capital for it. There are many ways they can raise capital, whether it's via equity, as we've done, IPO first, then rights issue, then APO, or you could go traditional bank financing, which we've also done, which is a bank loan, secured by, whether it's secured or unsecured. You have all of those options to look at. The reason you go that route is because you see an opportunity and you want to take up that opportunity, or you're just generally looking to expand the business. So you have to look at your business and see, all right, are you at the stage for takeoff? Now, if you want to be doing that using the public markets, obviously people have to have some level of confidence in you and your business before they're going to trust giving you their money. How you build that trust? Yeah, you need to have your financials up to date, preferably audited. By audited, it means that some independent party has looked at your numbers and say, all right, yeah, these guys aren't making things up. These things are true. That's the first thing, because once somebody picks up your financial statements, then they can see that you are, a reputable sort of institution. In our case, for example, when we did our IPO, the very first investment we made in was in Trinidad and Tobago. We bought into some condos. We bought about 8 or 9 condos at what was then Carlton Savannah. In fact, that was our name back then. We've done a number of transactions, disposals, and acquisitions since then. We did our two rights. We've done 2 rights issues. We did one rights issues where we ended up buying up some condos, which is how we expanded into the U.S. market by acquiring condos in South Florida. Those we've held for a while. We've disposed. We're completely out of condos. Did another rights issue, which is when we bought that property, that warehouse property on the wharf. We also bought an office building in the Cayman Islands. And then last year we did an APO, which is additional capital raising. And with that proceeds, half of it, some of it we used to pay down debt because, as you know, interest rates were rising. So we took the prudent approach to pay down, particularly our variable rate. And by variable rate, I mean when interest rates by the monetary authorities increases, then it means our cost of borrowing increases as well. So we've paid out a lot of that debt, converted some of that debt to fixed rate because of the environment that we're in. And from that time until now, we're basically holding cash because you want to hold cash if the right opportunity comes up. When you have cash and you're going to the market, you have a bigger talk, as we'd say in Jamaican parlance.
But then, so let's look at it. We're breaking it down for the students. You're saying I use other people's money, which is the best money. We know that we use other people's money to do these different transactions. So first was borrowing to do all of the, you listed out a lot of transactions, IPO, APOs, rights issue, that's getting other people's money, investors' money. You got those funds and you used it to do the acquisition of land. You used it to buy properties internationally, and you did joint ventures as well. You still have some of that money left, and you're saying, well, in 2023, we're holding cash. So I'm linking it back for all of us. Could we consider that cash like an emergency fund then? For the regular person, is it that, KP REIT has their emergency fund ready to take advantage of any opportunities?
Yeah, it's a combination of emergency. When people hear emergency fund, they think, if disaster happens or some catastrophe.
Yes.
Yeah, it's a little bit of that, because, let's say half your tenants went bankrupt and can't pay rent. We have cash that we can pay for the operating expense of the building, and we can pay to service whatever loans we have left. So there's a little bit of that in there. But the most critical thing, which is what the bulk of it is for, is if somebody, let's say we're going into a recession and somebody says, you know what, boy, I can't do this anymore, I'm going to sell my property. Then, we can come to the table. And because we have the strength of cash, we can close quickly. So, you can actually get good deals from that. So always try and stay somewhat liquid. Because if you look at, for example, the world's greatest investor, who is Warren Buffett, that's somebody that's holding a lot of cash right now, and we know the level of success he's had in his 60 odd 70 odd
Yeah.
years of investing. So, and
Yes.
cash is, people say cash is king. Once you have cash, you can take advantage of many opportunities. So it's a combination of the emergency thing, but the bigger part is to take advantage of opportunities when they come up.
Right. And that's something we talk about a lot for students to understand, right? It's 2023. We have higher interest rates. We have a lot of instability in the world because the Russia-Ukraine war is still a keep, still happening, right?
Yeah.
Inflation still a keep,
Mm-hmm.
right? And there's all of this uncertainty. We need cash then because we're looking at Warren Buffett, billionaire, mega billionaire. He has cash personally, plus he has cash within his business.
Yeah.
We look at KP Reed, mega business as well, holding cash, staying ready for any deals that could come out.
Mm-hmm.
We need to then say, wait a minute, if that a one, what may I do? Is my emergency fund stacked? And we talk about having 3 to 6 months of expenses put away. So everybody should be thinking 3 to 6 months of expenses. Do I have that put away? Also, do I have enough money so if I see an opportunity, I can jump on it? Because if these mega companies and mega billionaires are doing this strategy, I need to do it too because I want to be there. So I'm very glad that you brought that point home in that, you use other people's money within the business, you acquired that, you used it for profitable strategies.
Absolutely.
I don't hear you saying, KP Reed went on a major fixer upper.
No vanity projects.
Right, no frills.
No vanity.
Right? It went into profitable projects. And then, all right, we have so much money put aside now to get ready. We stay ready. KP Reed stays ready for any potential opportunity that's there. So we need to be doing the same thing. Students, we need to be doing the same thing as well. So let's talk about when things go wrong. Mm-hmm. Have you personally or the company done any projects that you said, we messed up here? And what was the reason behind that so that we can avoid that pitfall in our own lives?
Yeah. One of the things that I advise people on is a number of things. When you're going into a project, have timelines and be realistic about them. And when you make a decision, do all the research, do all the work. And if you do all the work, then you can stand with conviction that this was the right decision to make. Of course, you don't always hit it out of the park. Some people can't handle failure. And I would say we have to get comfortable with losses, get comfortable with failure. I give an example. When we bought condos in Florida, condos did well for us. We went into the condo market in Florida right after the Great Recession, when, if you remember back in 2000, that period 2008 to 2010, where real estate prices in the US had tanked. Lots of people were on,
just giving up their keys and moving out.
Yeah, man, yeah. So we went in and bought up a whole lot of condos during that time, got great deals, and the prices went up. I would say the mistake we made is that we stayed in them for too long, because then the market started to turn. So we came out still ahead in some cases, but if we had timed the market a little better and come out earlier, then we would have had a bigger return for our shareholders. So you kind of have to know, kind of time the market, watch the market, also read the signals carefully and react when you need to react. So I'd say that's the one thing. I'm very happy, knock on wood, praise God, that we've had some pretty good investments that have done well for ourselves and our shareholders. We had our AGM yesterday, and it was interesting. It's one of those AGM where I've never seen an AGM where shareholders were happy, but they were quite happy yesterday.
No, the returns have been good, and the regular dividends certainly doesn't help things. So within our classroom, within Money Classroom, we know about stocks, right? Everybody knows about, I buy a stock, I'm a part owner in a company, and they can buy stocks in KP Read, for example,
Correct.
right? So
And get dividends. I'm glad you brought up the dividends because we're one of the better paying dividend companies on the stock exchange.
right,
We're paid in US dollars.
them love them dividends, and worse, US dollars, the US dollars, the stronger currency, right?
Dollars.
But so we have stocks, we have bonds, everybody knows those, but alternative investing is the new kid on the block. And I know a lot of persons want to learn more about that. So when we talk about alternative, people say, you're in alternative investment, what are you doing? What exactly are they talking about there?
Yeah, I know in a lot of cases they're talking about things like private equity, which is the main type of alternative investments. Their REITs, their unit trusts, those are a whole bunch of other alternative investments. But you mentioned something earlier, which is joint ventures, which I think is something that persons need to be looking more at, where someone may see an opportunity, but you may not have all the cash available to go in that opportunity. You can do it jointly with a number of people. Because essentially, a private equity is like that, where you have a general partner who is a person who manages the fund. Let's call it a fund. They may have identified an opportunity. They don't have all the funds, so they go out there and find different people who have the strength of capital, and they'll take their funds and go after that particular opportunity. And they're managing it, but they're using other people's funds. So private equity, I think, is the main type of alternative, which is actually one of the fastest growing types of alternatives right now, because we know what's happening with the stock market. It's very volatile. Bonds are also very volatile. So people are looking at all different types of alternatives. So you could do it either via private equity or by private debt. Somebody might say, yeah, I have the cash, but I don't want to take on the risk of equity. I'd rather lend you the money at X%. Sure, might be a rate that is higher than the bank rate, but the terms may be a little bit more flexible. And some people may package that and sell that as a product to individual shareholders. But those are some of the things that persons can look at, particularly if you have a small business, look at how you can raise funding from other persons creatively. And I'm not giving advice. That's a disclaimer.
No advice around here. Yeah. But the thing is, when you think about alternative, it's because, well, the stock market this year, and especially in the Jamaican stock market, it hasn't really been going on with much, when you look at it in just generally, not really gone. And then with bonds, because interest rates going higher, bond prices falling. So not really going there either. But real estate, you didn't touch on real estate, which is the big one in alternative investments, right? Do you and this may be a biased question, knowing where your views on
know my answer.
do you think persons right now should be thinking more about real estate, given everything that's happening? Should I be thinking about, going to buy real estate directly or looking at REITs? What should I be thinking about? No.
The one answer I could say to that is it depends. It depends on your time horizon. For example, if you are looking at 5, 6, 10 years down the line, you definitely can look at real estate. And it also depends on your location, because in some markets, real estate not doing as well as in other markets. I give an example. In Jamaica, we've tended to see more stability in our real estate prices relative to, say, the US. And the same dynamic would apply to Cayman, which is another market that we're in. The truth is, both Jamaica and Cayman are islands with very limited land space. Population growth would mean that people will need places to live and play and work and whatnot. So real estate is always going to appreciate in those markets because there's limited amount of land. So I am confident in real estate in those markets. In the US, we tend to see a lot of volatility. Just look, that market tends to be a lot more liquid. And, a lot of persons use a lot of debt to finance those real estate investments, and when there's a crunch in the financial sector, that creates even more problems. So you tend to see a whole lot of volatility in the real estate prices there. I think given the trend with interest rates, them being prolonged for a while, because as we mentioned, inflation is still around. The monetary authorities, in fact, the Fed said that they are likely to continue to increase rates. Maybe it's just sounding off, but that's going to create some more weakness in the real estate market, particularly in the US. I think so. If you're looking, for example, to go into home purchase, I don't think now is the perfect time to do it. You could wait. Some people figure maybe later this year, maybe early next year. The tide might start turning, but watch for some fallout to happen there. As it stands here in Jamaica, as I said, our focus is mainly on warehouse type properties. Whether it's a big warehouse or a small warehouse. In fact, we're building some mini warehouses because, again, it's the kind of demand we're seeing. We've tended to stay away from the residential market, largely because we don't have a lot of expertise in that area, and there are lots of other players in that space. So I leave them to deal with to that. In fact, there are enough players in that space. I don't think it needs another party in there. I'm not sure what value we would add in that space. So we tend to stick with the industrial and, to a lesser extent, office space. A lot of talk about what's happening with office space and the future of office, with people working from home. Is there going to be more demand for office space? I know we've seen enough where some places landlords are defaulting on loans, and the commercial banks that lend them loans are having challenges. But when you think about it, the trillions and trillions of square feet of office space across the world, across the globe, that's not going to disappear. That real estate is still going to maintain some residual value. It may be valued less than what it is. Like next week, it could be valued less than it was a year ago or a month ago, but that's not going to disappear. So it's either, people will reconfigure them for other use, which is a growing trend. So you'd see people converting offices to residences, or like apartments or condos and that kind of thing, or converting them into life science buildings or schools or all kinds of things. But you still have the high-end real estate where some people are still in the office. I think the whole hybrid model will continue. I don't know. There's some who feel that the work from home trend is going to expand and become, nobody will be in the office. I personally don't think so. I think there will be a hybrid model, and I still believe that there will be people who will go into the office.
What about co-working? Do you think that's that's new? Future of work. Let's co-work. Let's feed off each other. Let's meet. Let's network.
That's right.
I see co-working as like the Airbnb on the commercial side. So Airbnb is, the whole residential setup, but on the commercial side, it could be co-working. What do you think about
growing rapidly? Particularly, we're seeing it growing rapidly in the UK, because it's like perfect analogy. It's like Airbnb, short-term rental. You don't have the commitment of a long-term lease. Okay, I need this space for 3 days. I can go and use an office space or a conference room or a meeting room for a day or a few days, and without the commitment. So there is the growth in co-working spaces, which I see a lot of professionals moving in that direction. So also another way how big office buildings are being reconverted.
Yeah, for sure. So let's bring the discussion to where person may be thinking about business opportunities, because we're big on the wealth building. Where do you see the opportunities right now as a leader in business? What are you thinking about with regards with your business, and where do you think the future of business is? Just so we can get a little thing and persons will take it and go and implement. What do you see as the future of business? How can we make some money?
Boy, there's so much talk about AI these days and what AI is going to do to traditional jobs. So you kind of have to look at what are some of those areas that probably won't get disrupted anytime soon. And I think things like personal care services, because, a robot can do so much and no more. I think personal care services will always stay well. So spas, healthcare, here, salons, that kind of thing. Those businesses, I think, anything that provides services to individual gyms, that kind of thing, those will, I think, will do well going forward. And that's why, you look at, for example, some type in our business, we're looking at some sort of mixed use, a little bit of retail type of property where those services will demand, space. Those people will always want space. And I don't think much will change in that area. We're very much in the gig economy now. So where you see people are, we can talk about Uber and Airbnb, as we mentioned before, where, people are using the assets that they have to make money out of it. There are also other opportunities now where people can actually do ghost writing for,
Yeah.
Chat GPT can take that over. But anyway, there are people who are doing things like ghost writing for others. You need something written. You can actually hire persons who will actually do that writing for you. So I would look at, those areas that are not likely to see huge disruption anytime soon. Anytime soon will be the areas to talk. And I think personal care services is a strong area.
All right, and then let's wrap it now on the investment side.
Mm-hmm.
Where do you, we're not giving anybody any investment advice, right? Kevin is just sharing his views, but where do you see the investment opportunities now? We talked about the business opportunities and whole heap, you listed out a whole heap there. What about on the investment side? Where do you see the opportunities? What's KP looking at, and what should we be looking at? Not just within real estate, but just generally on investments.
Yeah, look for something that's been beaten down and distressed or over beaten down, because even when you look at this Jamaica Stock Exchange, there's some well-run businesses whose stock price is way down. Unimaginable why their stock would be at such levels. I personally, this is me personally, not giving advice, I'm talking about what I do, is I look at well-run businesses that generate strong cash flows. Because if your business is not generating cash flow, you could have risks that, you could face challenges down the line. So I focus primarily on businesses that generate strong cash flows, businesses that have high cash balances, businesses that have good management team that have been there for a long time and been, some people love to act on news, and they get excited when they hear something big announced. And there's some well-run companies that have been around on the market for 20, 30, 40 years who've, they're steady, but they're always growing. I like companies like those. So they might not give you the 20%, that 120% in 3 weeks kind of thing, but best believe over a period of time, you'll get that 120% over a longer period of time. And I'd rather stick with those.
Now they say slow and steady win the race, right?
Always.
I'm a big fan of that, right? I'm not in for the quick, slam bam, thank you, ma'am thing. And because I can't repeat that every day. I like knowing that, no matter what, this is gonna work. And the slow and steady always wins for me with there as well. So thank you for that.
And the important thing is that, we're busy. We're doing other things. We don't have the time to sit down and watch a screen and how a stock is trading. So, we'll get in now and then try and get out late. We don't have the time for that. So stick with the slow and steady.
Nice. Love that. We're going to leave it there. Slow and steady wins the race. Thank you for being on with us, Kevin. Always a pleasure. Pick up yourself.
All right.